Hi, everyone. Welcome to the latest Carson's Take 5 with Ryan and Sonu. Sonu, do you want to guess where I am right now? Can you tell there?
Yes, city slicking, my friend, here.
I am in New York City, so apologies if there's a few extra loud noises. I'm going to talk a little louder. Hopefully you hear me. But Sonu, we want to talk about welcome to the year-end rally. Right? Well, you and I have been pretty optimistic most of this year, and we're now, a month ago right now, all we heard about was market in a correction, end of the world is coming, recession is coming. Now we've had a huge rally in November. So now what are some of the reasons you think this rally can continue into December, into the end of the world?
Look,
end of the world, end of the month. End of the month, Sonu. Apologies. Not end of, that's what everyone was saying a month ago. End of the month,
that's
what I meant to say.
You're in New York City for the end of the world. I mean, no, look, your work has shown, we've looked at all the charts and you've put out some great data showing that this is a strong time for markets, right? Seasonally, November, December, January are strong months. There are flows coming in. And then, the S&P is up about more than 20% at this point for the year. There are a lot of people who have been caught on the wrong side of this. So they're going to chase this rally into the new year. Right. And then the third piece of it, I think, is the Fed. Now, inflation's come down. The last inflation report, we've talked about it, that came in below expectations. And suddenly everyone's now, forget higher for longer, everyone's now talking about rate cuts, right? The odds of a rate cut in March, Ryan, is up to almost 50%. That's going to be a huge tailwind. I don't think the Fed's going to cut in March, but that's a big tailwind.
Just like everyone expected, right? You think about it, everyone. So December historically is up 1.4% on average for the S&P. And no month is more likely to be higher, up about 3 out of every 4 times. But Sonu, here's what's interesting. In a pre-election year where we are, those returns nearly double, up almost 3% on average in December. And when you're up at least 10% for the year, so a good year going into usually one of the best months of the year, you know what happens? You see a chase. The returns actually get better, especially in a pre-election year. So listen, there's a lot of ways to look at all this. The bottom line, like you said, Sonu, the economy is still strong. The Fed is likely done hiking, maybe even cutting next year. And you had everybody and their mother telling us how this is a bear market. There's only 7 stocks participating, telling us all these things. And now they're realizing, maybe that's not the case. So, one question, I just did a radio interview. They asked me, when do you think the Fed could cut? Could the Fed cut in the first quarter, or do you think it'll be a little later in the year, potentially, when they start to cut?
I think the first quarter is too early, and the market's putting that at 50-50 odds, so it's a coin toss, literally, right? But I think, in the first 6 months of the year, we could see potentially one rate cut, right? Now, our base case for next year is there's no recession. Right. So usually when there's a recession, you expect a lot more cuts. But here, we could see the Fed doing some, let's call it insurance cut. Right. Anytime we get an air pocket, so to speak, in economic data, or suddenly, we get 2 months of low, employment reports, but, below expectation in payroll reports, they may take an insurance cut. And you know what? We're cutting 25 basis points. Right. So I think that's the scenario we're potentially looking at. And look, Ryan, we just printed 5% plus GDP growth for Q3 for the third quarter. The fourth quarter is tracking, just above 2%, right? I mean, the big difference there is that there's no, the inventory buildup was what pushed, GDP growth all the way up to above 5% in Q3. That's not going to be in place for the fourth quarter, but private demand, right? And even total public plus private demand, government spending, private consumption, businesses, investing, all of that's looking close to on trend to above trend. So we're in a good place here.
No, you're absolutely right. As we've got about a minute to go in the latest Take 5 with Carson Investor Research. I mean, there have been so many worries. We've heard them loud and clear. Inverted yield curves, weak manufacturing data. The consumer hasn't felt good. And we haven't ignored those. But we've been saying, we're not so sure about all those because when you look at the hard data, manufacturing is improving. Housing hasn't been great. But, hey, yields are coming down. Maybe housing could be a big boost next year. Oh, by the way, we should have record earnings next year. year, profit margins have actually increased, and 12-month profit margins increasing, and CapEx, capital expenditures, companies investing in themselves to create higher productivity down the road, that's expected to also potentially hit all-time highs, Sonu, for the S&P 500. So, Sonu, as we've got about 30 seconds to go, what could upend this? Where could we be wrong? Where could maybe things fall apart potentially? Let's not get too negative, but what are we looking for there?
I mean, up until recently, my biggest fear was an energy shock. Yeah. Something would happen with OPEC plus, something like that. And there'd be a big spike in energy prices that will send inflation higher again. It'll spook the Fed. The Fed keeps rates longer than what is more tight than longer, than what's necessary, right? And potentially push the economy into recession. I'm a little less worried about that right now, given OPEC struggling to boost up prices and things like that. So, yeah, no, I think it's just the Fed mostly. I mean, if the Fed stays too tight for too long, we could be in trouble, but I don't think that's going to be the case.
Well said there. There's a lot of activity behind me in New York City. Cars honking. I'm going on mute when you talk. So the economy seems to be buzzing in New York City right now. So with all of that, welcome to the year-end rally. It's been a nice run. We still think there's some upside before this year is done. This is the latest Take 5. We'll see everybody next time. Take care. Goodbye.